It's the dominant theme that's run through my life since I bought my first stock in the spring of 1942 when I was 11 years old. And it overwhelms everything else over time. I mean, we have hiccups in the economy, and we even had a panic in 2008. And we had a war during that period. That when I started, we were losing the war, actually, in the spring of 1942. But this country always comes back and wins. And it's astounding when you think about it, what's happened in 240 years. That is less than 3 of my lifetimes. And just look at this place. I mean, there wasn't anything here 240 years ago. And civilization had gone on, for centuries and centuries and centuries with people making very little progress in their lives. And then America showed the way. And we have not lost the secret sauce.
In terms of what the message is you want to get across to people, I mean, when we're looking at markets at such high levels, as Joe was just alluding to, it has a lot of doubters and a lot of people saying, wait, it's too late for me to get in. I've missed it. We're past Dow 20,000. Yeah. Now I have to wait for the pullback. What would you say to someone like that?
Well, I would say they don't know, and I don't know. And if there's a game that's very good to be in for the rest of your life, the idea to stay out of it because you think you know when to enter it is a terrible mistake. I don't know anybody that can time markets over the years. A lot of people thought they can. But if you were buying a farm and you decided that farms were going to be worth more money 10 or 20 or 30 years from now and that it would be a productive asset, you'd go out and buy it unless it was just at some absurd price. And the best thing with stocks actually is to buy them consistently over time. You want to spread the risk as far as the specific companies you're in by owning a diversified group, and you diversify over time by buying this month, next month, the year after, the year after, the year after. But you're making a terrible mistake if you stay out of a game that you think is going to be very good over time because you think you can pick a better time to enter it.
Although you have had times where you thought stocks were incredibly cheap, like in 2008, 2009, when you talked about that, even on our program. You've thought that there were times that stocks were greatly overvalued, where you've said, forget it, don't do it. Are we near an inflection point right now, as best as you can tell?
Well, I've been talking this way for quite a while, ever since the fall of 2008. I was a little early on that, actually. But I don't think you can time it, and we are not in a bubble territory or anything of the sort. Now, if interest rates were 7 or 8%, then these prices would look exceptionally high. But you have to measure, you measure everything against interest rates, basically. And interest rates act like gravity on valuation. So when interest rates were 15% in 1982, they pulled down the value of any asset. So what's the sense of buying a farm on a 4% yield basis if you can get 15% in governments? But measured against interest rates, stocks actually are on the cheap side compared to historic valuations. But the risk always is that interest rates go up a lot, and that brings stocks down. But I would say this, if the 10-year stays at 230 and it would stay there for 10 years, you would regret very much not having bought stocks now.
Joe, this sounds like a perfect jumping in point for what you had just been talking about, where you were watching what's happening with interest rates.
I think it's, as much as we talk about economic nationalism, it is still global. And I don't know, when the rest of the world's headed one way, it's just, the money's going to come in here for our bonds, and as long as that happens, I guess we stay low. I was thinking about something else, Becky, and I don't want to take this too far afield, but with Warren, I was wondering what it is about us, about the United States, and I wonder that is so different from historically the way countries have prevailed, Warren. And I wonder if eventually we can't just assume we'll always be this dynamic, or is the Constitution and the way they set things up, those guys were that smart, or is it the people that we have? Is it that we've brought in so many people from around the world that came from places where they didn't want to be, and they came to this great spot here? And is it, have we selected genetically for people that are entrepreneurial and work hard? I don't know. Have you got your finger on what it is? If you don't, I don't know who does. You've had plenty of time to think about it. I mean, you're not old, but you've had a lot of time to consider these things.
Yeah. If you go back to 1790, Joe, there were 4 million people roughly in the United States, of whom 700,000 were slaves. There were 900 million people around the world. So we had at that time a half of 1% of the world's population. And it was a friendly country in terms of the soil and the minerals and the temperature and all of that. But there were other friendly spots around the world. And so why did these 4 million people do something that 900 million people hadn't been able to do before, where progress had been very slow? And I would say that it was a combination, none of these perfect, but I think the market system was absolutely essential to it. It was not a planned economy. And I would say that rule of law was important, never perfect, but far more than many places. I would say that equality of opportunity was a factor. I would say that immigration did select for people that, to some extent, selected for people that were ambitious and really wanted a new life. But if I had to pick one thing, I would say the market system was the overwhelming factor that contributed to it.
Life is weird, too, because I think it's weird that Adam Smith wrote that book in 1776.
Yeah, exactly.
That's not a coincidence. That when you're able to own an idea and that you got like a court system that will back up your ownership of patent law, and then you can commercialize it, I think maybe that was it. I think intellectual property and property rights and things like that. Because prior to that, after 10,000 years of spinning our wheels, what was the average GDP per person? And then all of a sudden, starting when you were able to own an idea and commercialize it, suddenly it exploded, GDP, like in multiple times.
It unlocked human potential, Joe. I mean, we aren't smarter now than they were 240 years ago, and we certainly don't work harder. But once you started opening up human potential, it's the sky's the limit, and it's just starting.
There are times, Warren, where you hear pundits or other people saying, look, things are at risk at this point. Our American way of life, our system is under threat. And I've heard this from all sides at all different times. Is there ever a point where you thought that was the case?
No, you say you've heard it at all times from all sides. I've been hearing it all my life. And in the spring of 1942, I was 11 years old, and the Dow was at about 100. And we were losing the war in the Pacific at that point. It was shortly after Pearl Harbor. And there was no doubt in this country we were going to win over time. I mean, and people said, well, let's wait till things are clear. Let's wait till we start winning the war. There's always a reason to wait. And I've listened to that all my life, that when I got out of school, the Dow had never been above 200. There had never been a year when the Dow had not been below 200 during the year. Even in 1929, when it got up to 381, the low was below 200. Never been a year. Well, so what? But that was a big subject at that time. And then we ran into price controls. We ran into the oil shocks. You name it. Just all kinds of things. And those are diversions. So. All my life, I've been hearing, maybe there's a better time to invest, or things are more unpredictable now. They're always unpredictable. I can't predict what's going to happen tomorrow. I mean, you could have anything happen tomorrow. We've had October 19th, 1987, 22% down in one day. So I can predict what will happen in 10 or 20 years in a general way, but I have no idea what will happen tomorrow. And the important thing is if you've got these wonderful assets out there, to own them. And which ones do you own? I mean, if you save money, you can buy bonds, you can buy a farm, you can buy an apartment house, or you can buy a part of American business. And if you buy a 10-year bond now, you're paying over 40 times earnings for something whose earnings can't grow. And you compare that to buying equities, good businesses, I don't think there's any comparison. But that doesn't mean the stock market can't go down 20% tomorrow. I mean, you never know what it's going to do tomorrow, but you do know what it's going to do over 10 or 20 years. And people talk about 20,000 being high. Well, I remember when it hit 200, and it was supposedly high. The Dow in your lifetime, you're going to see a Dow that certainly approaches 100,000. And that doesn't require any miracles. That just requires the American system continuing to function pretty much as it has.
You had made some headlines when you said, maybe a month or two ago, that you had spent about $12 billion in stocks since the election. Have you continued to spend since that time?
Well, I'm not sure exactly when I said it, but we've certainly bought in two groups. I'm adding them together now. we spent 14. We probably spent since a little before the election, maybe, because we were maybe 20 billion even.
$20 billion? You're just counting the billions in your head as you sit here doing this?
Well, I was, yeah. I quit when I got to 20.
And why now? Again, is there a reason for this, or is it just you look at individual stocks that you wanted to own and you bought them?
I absolutely look at individual stocks. It has nothing to do with the Federal Reserve. It has nothing to do with the election. It would have something to do with interest rates if they did something extraordinary. It hasn't had, because they haven't changed that much. But there just were a couple of things I wanted to do, and we had the money, and I like investing, and I would much rather have that 20 billion in these companies. And I don't look at it as being in stocks. I look at it as being in businesses. It's just small pieces of businesses. And I would so much rather have that than have the money in Treasury bills, which is my alternate. I don't have any problem with the decision at all.
What are the businesses? Should I assume it's Apple and the airlines, based on what we've seen?
I think that's a good guess.
But $20 billion, is that more than what we have been told based on the 13F filings? I'm just going back.
It's more than showed at December 31st, because we spent a lot of money since December 31st.
On what? Is it more Apple, more airlines?
Since we're not buying it now, and it's at a price different than I would buy it now, but we bought a lot more Apple after year-end.
The holdings that you had, Apple was already, was it the fifth biggest
holding? I think we showed
third
59 million or something like that. Sure.
Yeah, I'm sorry, I'm just looking through the report right now to grab that page. It was already your fifth biggest holding as of December 31st at $7 billion. How much more did you buy?
And
$7 billion.
You know, we could change our mind tomorrow and all of that, but we have not bought Apple in the since the earnings report came out, because it shot up some then. But we would have, one of the fellows in the office has about 10 million shares, and I have, for Berkshire's account, about 123 million. So we got about 133 million shares.
One of the fellows, that's Todd or Ted?
Yeah.
Would you care to say which
I
one?
never identify which one does which.
So one of them bought, and then you, as a result, bought some additional?
One of them had 10 million shares, and then I bought another 123 million shares or something like that.
Why?
Because I liked it.
You know, you've always said that you're not a technology investor, and now when you start looking through the holdings.
So I'm not a technology investor.
Wait, they can't hold this. Hold that up higher. They can't see it. That's your
There's a vast untapped market out there. I mean, 86-year-old guys who haven't got it yet.
So you say you're not a technology investor, but you're buying shares of Apple, which is now Berkshire's fifth, or maybe even larger than that, based on how many that you've put in since then, how many you've bought since December 31st. IBM is your third biggest holding, too.
Well, I would say Apple, I mean, obviously it's very, very, very tech involved, but it's a consumer product to a great extent, too. And I mean, it has consumer aspects to it. And one of the great books on investing, which I've touted before, is one that Phil Fisher wrote back around 1960 or thereabouts. It's called Common Stocks and Uncommon Profits. It had an effect on me. I went out to meet Phil Fisher after reading the book. I found him in this little office in San Francisco. And I recommend any investor read that book. And it's still in print. And he talks about something called the scuttlebutt method, which made a big impression on me at the time, and I used it a lot, which is essentially going out and finding out as much as you can about how people feel about the products that they use. It's just asking questions, basically. And Apple strikes me as having quite a sticky product and an enormously useful product to people that use it. Not that I do. Tim Cook's always kidding me about that. But it's a decision based. But again, it gets down to the future earning power of Apple when you get right down to it. And I think Tim has done a terrific job. I think he's been very intelligent about capital deployment. And I don't know what goes on inside their research labs or anything of the sort. I do know what goes on in their customers' minds because I spend a lot of time talking to them.
Have you spoken with Tim Cook about this?
No, not about this. Not about this. He would have seen our 13F filing, and he would have seen the one before, so he would have known somebody at Berkshire owned some shares, and then he would have seen the 13F filing. And I usually see him maybe twice a year. I see him at Sun Valley and perhaps one other time.
Wow. Can I ask you, you said it's how many shares that you own, 133?
Well, 133 million. Yeah.
Which, I'm sorry, how many did you own as of December 31st that worked out to $7 billion? I can't do the math in my head.
I think we had 59 million at year end.
So you've more than doubled it since that time.
That's correct. And we actually, it's amazing how much you can buy of some of these things. So we had bought that, the added 70 million plus. We bought that all by the time they reported their earnings. So it was done probably in 20 business days.
And their earnings were better than people had expected, and the stock jumped as a result. So
yeah, I don't think they were that much better than people expected. I mean, the company...
stock was up after the earnings report.
Yeah, it did jump, and that's why we quit buying. We would have probably bought more. But the stock, they tell you every quarter what they expect in sales and in gross margins, and they've been pretty accurate on that. So I don't think the fourth quarter, well, in the fourth fiscal, I mean, it's the December quarter, they're on a fiscal year. I don't think that was that big, or should have been that big a surprise. But they've got an extraordinary business.
Wow.
There's always people trying to knock you off. And the market system, one of the things it does is if you've got something good, you've got a lot of people that are gunning for you.
Right.
And you've got some very smart people that are gunning for them.
You know, we can talk more about this in just a moment, if you don't mind, if we sneak in a commercial break.
Okay. Yeah.
By the way, for anybody who didn't think we were going to get to big news very quickly, you're already missing a lot. Warren Buffett already telling us he's been buying more stock since the beginning of the year, since the last 13F filings, telling us he's bought more than double the amount of Apple that they had disclosed at that point. Stick around, because you never know what's going to come out of his mouth. We'll be back with more from Warren Buffett in just a moment. Warren Buffett has already told us this morning some secrets that nobody else knew until just now. Warren Buffett and Berkshire Hathaway had been buying a lot of shares of Apple. In fact, as of the end of the year, according to SEC filings and the annual report, it was the 5th largest holding of Berkshire at $7 billion in that stock. Warren just told us that he had continued buying that stock even through the beginning of this year. And at this point, he now owns $17 billion worth of Apple shares. That gives him about 2.5% of the shares outstanding of Apple, and is now the second largest holding after Wells Fargo for Berkshire Hathaway.
Yeah, it'd be very close, but...
very close to Coca-Cola.
Yeah.
Very close, neck and neck with Coca-Cola, but it looks like it edges it out, at least where the price is right now. Warren, we were talking a little bit about how you came about this to this decision. And I assumed you had people who would go out and do some of these channel checks for you and do some of these things. But you just mentioned to me you've done some of the research yourself right here in this building. Well,
I learned that from a fellow named Phil Fisher, who wrote this great book called Common Stocks and Uncommon Profits. And he calls it the scuttlebutt method. And Phil was a remarkable guy. I first used it back in 1963 when American Express had this great salad oil scandal that people were worried about it bankrupting the company. So I went out to restaurants and saw what people were doing with the American Express card, and I went to banks to see what they were doing with traveler's checks and everything. And clearly, American Express had lost some money from this scandal, but it hadn't affected their consumer franchise. So I ask people about products all the time. When I take my great-grandchildren to Dairy Queen, they bring along friends sometimes. They've all got an iPhone, and I ask them what they do with it and whether they can live without it, and when they trade it in, what they're going to do with it. And of course, I see when I come to the furniture mart that people have this incredible stickiness up with the product. I mean, if they bring in an iPhone, they buy a new iPhone. I mean, it just has that quality that it gets built into their lives. Now, that doesn't mean something can't come along that will disrupt it, but the continuity of the product is huge, and the degree to which their lives center around it is huge. And it's a pretty nice franchise that with a consumer product.
Hey, Joe, you can relate to that, the stickiness of the product and being hooked into the Apple ecosphere, right?
So many different ways, too. I think it's funny that Warren doesn't have one, but it's weird because you're walking around with the Encyclopedia Britannica on your back, but it's the size of this little thing. And anytime, anywhere, you need to look up anything. And I mean, you could be on Jeopardy, and if people didn't see that you were looking at your iPhone, you'd get every question right. And I can listen to every song that's ever been recorded. And I used to live in L.A. and I was afraid to leave the freeways because I had no idea I'd get lost. So I'd just sit in that traffic for like 11 hours to get to go 5 miles. All of a sudden with this, you just press it in, and I got all the surface streets, it's so bizarre, it's so life-changing. But the thing that you don't buy stocks, Warren, for 10, 20, 50% normally. You like to buy stocks that over time double and triple. So you're fully saying that this $700 billion company is going to be $1.3 trillion. Then it's going to be $2 trillion. Then it could, right? It's 700. Okay, today.
You're saying it. I'm hearing.
Okay, but
Joe,
you're not worried about the law of large numbers because it's the most valuable company in the world right now at something like 720 billion. So you have no problem thinking that it's going to be the first company to go over $1 trillion in market cap. And I mean, sooner or later, it's got to happen, obviously.
I won't make any prediction on that, Joe. But what I do know is when I take a dozen kids, as I do on Sundays, out to Dairy Queen, they're all holding their apple, and they barely can talk to me except if I'm ordering some ice cream or something like that. And then I ask them how they live their lives, and the stickiness really is something. I mean, they do build their lives around it, just like you were describing. And the interesting thing is when they come in to get a new one, they're going to they overwhelmingly get the same product. I mean, they have their photos on it. And I mean, I know you can make some shifts and all that, but they love it.
Right, but my point, I mean, you see what I mean about the law of large numbers. It will be $1 trillion company event. It's only got to go up 40% from where it is now. So, I mean, I don't think you'd buy it if you thought it was going to peak at 800 billion.
Well, or they could, Joe, which they bought in shares quite aggressively. They
buy back, yeah.
Yeah, so they could, you could have a lot fewer shares outstanding at some time and still do very well on a per share basis. They bought in about 4% of the company last year, and they've been pretty aggressive on that. So my guess is they've got about 5.25 billion shares out now, but my guess is that 10 years from now they'll have substantially fewer.
Let me ask you a question. What would you put a bet on? Which company goes to $1 trillion first, Apple or Berkshire Hathaway?
Oh, I'd bet on Apple just because they got a stronger position. And if Tim wants to swap it even up, I've got an 800 number for him.
I can't believe you're poor.
While we're on the subject,
sorry,
go ahead, Joe.
No, I was just thinking that one of your guys, you wouldn't say which one, I mean, did you really have to do that, Warren? I mean, what'd you say he had like? Well, yeah, I've built up quite a position. I've got, what did he have, Becky? How much did he have? Like 10
million shares. 10 million shares.
Yeah, I like it. I love it. I've got 10 million shares. And you go, yeah, I like it too. I got 133. I mean, that's cold, Warren. It just, you know what I mean? I mean, it was his idea. It's his idea. And then he had 10 and thought he was feeling good about himself. And you bought another 123 million on top of him? Seriously?
He gets to go first, Joe.
He was feeling good. Yep, I'm a big investor.
Good about Warren. Yeah. Well, look, if Warren Buffett takes your ideas and follows you, man, I think that would make you feel pretty good.
That's
walking
true.
Around with that, right? All right, let's talk about another thing that you've been buying a lot of, and that is the airlines. We just found out, at least at the end of the year, how much you owned in each of them, and they were pretty significant stakes for the four majors. That would be American, Delta, United Continental, and Southwest. At the end of the year, we were reporting that you had stakes of about 7 to 8.5% for some of these airlines. Where are you now?
It's about the same. They may have been tweaked just a shade. There again, one of the fellows in the office has essentially one of those positions. He while he was building that position, he owned a couple of the others just because he wanted to get the money invested, and then he was going to shift over. So, but one of them has he has the American Airlines position, and I have the other three. Those positions, as you mentioned, we're fairly close to 10%. We don't want to go over 10% virtually on any stock. It complicates life for us. We do it occasionally, but it's a big decision to make whether to go over 10%.
Why does it complicate it for people who aren't familiar with the rules on what you can and can't do once you go over 10%?
Once you go over 10%, you become subject to what they call the short swing rule. So if you buy and sell a stock that you have over 10% of in 6 months, you actually have to give any profit to the company. Actually, if you sell and then buy, or buy and then sell, and they take the lowest purchase price and they take the highest selling price, it's been on the books a long time, and it can complicate things. Plus, you have to publish what you do within 2 days or so after you do it, which is not the case when you're below 10% when you report quarterly. So we don't go over 10% very often. And with the airlines, all four of the ones you named are repurchasing their shares. Now, at Wells Fargo, we went over 10% simply because the company repurchased its shares. We didn't buy any stock.
Well, you couldn't. For a financial company, you're not allowed to buy over 10%. Right?
Not unless you want to become a bank holding company. Yeah.
Right.
There's more laws on that. In any event, on the airlines, if we own 9%, we might find we were 9.5 or something like that because of repurchases. So we will stay under 10 in all probability, and that's where we are now. And like I say, one fellow owns the American, and I own the other three.
All right, let me read a couple of things back to you. In the past, you've said things like, I have an 800 number that I can call if I get the urge to buy an airline stock. My name is Warren, and I'm an airaholic, and then they talk me down. You also said that if a capitalist had been president at Kitty Hawk back in the early 1900s, he should have shot Orville Wright. He would have saved his progeny money.
That's not true. He'd have saved him a lot of money. If you look at the last 30 years, you can look it up on the internet, I think there have been almost 100 airline bankruptcies. I mean, that is a lot. So it's true that the airlines had a bad first century. I mean, they're kind of like the Chicago Cubs. You know, everybody has a bad century now and then. and they got that century out of the way, I hope. But it's been a disaster for capital. I mean, it's got glamour to it. So you can always get guys to put some money up for an airline. And you can go to the internet and look at 100 of them that failed. And all of them now that are operating, you know, with the exception Southwest. I mean, they've been through bankruptcy, and I bought into one called U.S. Air. That was my previous investment in the late 1980s. Ed Colodny, who was the CEO, came out here. We had dinner at Gratz, and I gave him $358 million, and it disappeared almost before we finished dinner. I mean, the airline, U.S. Air had some favored routes, but Southwest was coming at them over time. And I tried to sell that stock at 50 cents on the dollar. It was a preferred stock. Fortunately, I wasn't able to do it, and then they had this blip. So we actually made quite a bit of money. I mean, we're 1 for 1 on airlines, actually, but not because we were smart. And then it went bankrupt twice afterwards, U.S. Air did. It's part of American Air now.
So why in the world do you buy back in now? If you are so sure that this was a horrible business, what's changed?
It's a very tough business because it's got the marginal cost of a seat is practically nothing. You have these huge fixed costs, and yet more person on, there's virtually no cost to it. So you're very tempted to sell that last seat too cheap. And if you sell the last seat too cheap, it becomes the first seat in a way. So it has this dynamic to it. And unless the airlines operate in the well over 80% capacity, what kills you is when they really have too many airplanes around. I mean, they do what anybody else does. If they got too many airplanes around, they get down to marginal cost, and marginal cost cause you to go broke over time in the airline business. The hope is that they will keep orders in reasonable relationship to potential demand. And lately they've been operating in the 80s now for a while, but it's a business you can always mess up.
You know, Charlie Munger was your partner, your vice chairman of Berkshire Hathaway, was speaking at the Daily Journal meeting just a couple of weeks ago. And he talked about how you guys are in the airlines at this point, and then said, you know, I just went on and bought a ticket to Europe for $400 or $500, and I thought, what are we doing in this business?
Exactly.
Was Charlie on board with this decision?
Well, Charlie's generally goes along with me. I mean, he may say, "Well, this is, well, you know, I've never heard you come up with a worse idea, Warren," or something like that. But when Charlie says that to me, I know he's going along with me. So we get along very well. You know, he's okay with both these decisions. But as he would say, and correctly, it's not like the old days. But I've been hearing that a long time, and it's true.
Joe?
I thought if you're going to go to break, I was just thinking about the irony of this. So he loves Apple and doesn't own an iPhone, doesn't know anything about it, and he loves airlines, but hasn't been on a commercial flight since the Wright brothers, I don't think. You know absolutely nothing about
You're giving away my secrets.
Huh? What? When's the last time you were on a commercial flight, Buffett? Tell me.
Well, we'll save that for after the show.
Fair to say it's been over 30 years?
Yeah,
my family brings up the same thing to me, so I've been hearing this before.
Was the in-flight movie that just released Casablanca?
Actually, it was Birth of a Nation.
All right. I just thought about that you don't need, obviously, to use these things to have an investment opinion, but it's amazing. It's amazing. It's very interesting today, Warren. I'm enjoying this. I haven't left, and I'm going to stay here. I'm all alone.
Yeah. Well, you got to realize I started in textiles and department stores, so some of these things look good to me just on a comparative basis.
Yeah, right.
You know, Warren, it does occur to me, though, if you're building up such a significant stake in all the major players, is that anything that's like monopolistic behavior? Is there any concern to think that you would say something to the airlines to make sure that they're not competing on prices quite the same? What would keep somebody from worrying about that?
Yeah, I've never met the CEOs of any of the four airlines. I may have met one down at the Texas Business Hall of Fame thing to shake his hand. I mean, Herb Kelleher was down there for sure, but
yeah.
no, I have no communication with them. And index funds own a significant percentage of each one. And we'll see how it turns out. I mean, if the orders that they have now would not look excessive. I mean, they usually take options and they can delay deliveries and so on. But it can be brutal. And I mean, you've got lower cost airlines. You've got startups that can come at them, and historically, the pricing has been a very tough game. I do like the fact that they used lots of money to repurchase shares. Most of them had these huge tax carry forwards too. So they had a lot of cash coming in for a while. They've used up the carry forwards in general. But the idea that you're buying something because it has a huge tax loss carry forward is not the best signal in the world. It's getting into a wonderful business. But they bought in a lot of stock. I like that. And we'll see how they do. We bought them at lower prices, and we're not buying them now. And I don't want anybody to run out and buy airlines.
But you're a passive investor.
Oh, yeah, totally, yeah. Totally.
Okay. Folks, we will have much more from our special guest, Warren Buffett, when we come back after a very quick break.